Good morning, everybody. Welcome back to my channel. I know it's been a while since I've put out a video on this channel. Most of my stuff goes on my main channel, which is just Radix Verum. If you're not subscribed there, I encourage you to go subscribe there. Hit the little bell notification so you get a notification every time I publish a video there, because I do believe that I am suppressed, shall we say. That's just one way to word it. I think you guys understand what I mean. And if you're not subscribed to this channel, the Radix Report, I encourage you to do so. Subscribe to the channel, become a member of our little community here, because I try to keep you guys updated on lots of different topics, depending on what it is that I want to cover at any given time. So this channel focuses more on financial news, which I think is really, really important. And my other channel focuses more on culture, politics, things like that. So with that being said, we are getting back into Citadel and Ken Griffin. If you haven't watched my prior video on Citadel, I will link it in the video description, and I encourage you to go watch that first and then come back and watch this one. Okay, so we're going to get back into this. This is from Grit Capital. She's the CEO of Grit Capital. Breaking: Citadel Securities fined $9.6 million in Korea for violating the Capital Markets Act. Interesting. Citadel is charged with, quote, disrupting the market order with high-frequency trading in hundreds of stocks. They created fake orders, so they were spoofing, and then canceled them to drive up prices of stocks. You think they're only doing that in Korea? Newsflash, they're banned from short selling in China, and that needs to happen in the US as well. US financial media has not picked up on it yet. She has a source here from a Korean website. According to Wikipedia, it is a major news agency. Okay, so moving on. This is an interesting, I think this is interesting. So Goldman Sachs generated 11 billion in net income last year, and they have around 40,000 employees. I know that they just announced some layoffs. However, it's a pretty big company with employing lots of people, and so 11 billion was what they made. And they're well known on Wall Street, yet Citadel netted 16 billion with just 2,600 employees. Interesting indeed. Continuing on, I thought this is where it gets super, super weird for me. Wait, Ken Griffin at Citadel Securities hired BCG to sabotage the companies competing with Citadel that they were consulting. That's illegal. He also hired ex-CIA agents to train his employees in how to dismantle his competitors. This is criminal. At FBI, at DOJ Criminal Division, do you guys fight crime? Well, they're not going to fight that kind of crime, I can tell you that right now. But let's go ahead and read this. We'll zoom in. Hopefully everybody can see this. He traveled to schools like the University of Pennsylvania's Wharton School, where he would interview students just a few years younger than him. This is talking about Ken Griffin, the CEO of Citadel. Griffin placed his firm at the forefront of learning how to model the financial markets in an industry that was still coming to terms with the power of computers and predictive analytics. Quote, the approach to investing we were taking was a decade ahead of its time, unquote, says James Ye, one of Griffin's earliest hires and a friend. Quote, we were inventing things, unquote. And Griffin loved the challenge. Quote, he was sharp, said Ye. He was ambitious. Now we get into the interesting part. Griffin devoured management books, hired consultants like Boston Consulting Group to compile intel on his competitors, and brought in ex-CIA agents to train employees on interrogating corporate CEOs. So there's a saying like, once CIA always CIA. You know, you don't ever become an ex CIA agent. You're always part of the agency, whether you're quote unquote retired or not. Once a clown, always a clown. So that's interesting. Griffin labored over making successful trades repeatable. Quote, everything there has a process, unquote. David Bunning, one of Griffin's first hires, said, quote, we were trying to be the best at what we were doing, unquote. When competitors stumbled or failed, Griffin moved quickly to figure out what they did wrong and build those lessons into his business. In 1994, Federal Reserve interest rate increases caught Wall Street traders off balance and led investors to pull a third of the fund's money. Griffin rewrote his investor contract so that he could hold investor money for longer. 4 years later, the hedge fund long-term capital management collapsed, but survived for longer than expected. Griffin interviewed LTCM employees and learned that the fund had extended its life by locking up long-term financing. He developed an internal operation that lessened his reliance on Wall Street loans. So that just kind of gets into what he was doing and how he was doing things. Very and I just find it interesting. Like, look, we know that the CIA has to fund black operations, and we know that they kind of are involved, and you have to have a way to launder that money successfully. Just saying, you know, I don't know if there's something going on there, but I do know that there's something strange here. So here we have a tweet. The successful strategy employed at Citadel is called front-running short sales of the NASDAQ. They exacerbate volatility and take advantage of it. They see all the trades coming through, selling into weakness all year. It's just not right. This is allowed to exist. So people might be asking, is what they're doing illegal? So Citadel, they don't own Robinhood or anything like that, but they process all of those small transactions. And then they look at the data. They're able to see the data of like what regular people are doing, the trades regular folks are making, the kinds of young people that are maybe inexperienced and are using something like Robinhood. They're able to look at that data, and then they can kind of bet against those people. So that's something to keep in mind, you know, when you're considering like what is really going on here. Yeah, so this is interesting too. Justice Department targets spoofing and scalping in a short seller investigation. Yeah. But what do we expect? Do we really expect anything to change or anything to happen? I certainly don't. Here's an article from March of last year, Citadel under investigation by DOJ. Bloomberg just confirmed Citadel is one of the hedge funds under investigation by the DOJ. Well, don't hold your breath for anything to actually happen to them. This was almost a year ago. Have we heard anything about this since? Not really. Regulators are taking Morgan Stanley and several other hedge funds to court after several subpoenas were sent out earlier this year. Bloomberg's report confirms Citadel is one of the hedge funds on the list who the DOJ is seeking information from. Okay, so this clip came about on Twitter where community members shared the news. Citadel's under investigation and the community is spreading this like wildfire. Let's dive into it. So this is the clip being referenced.
When it comes to Morgan Stanley and that block trading probe, we are hearing here that now the DOJ is seeking information on executives at Citadel, Element, and others. They have names that have been highlighted here. Does show just where the scope of what's pro.
Okay, so continuing on, Citadel has been one of the hedge fund / market makers who's been attacking AMC Entertainment stock. Predatorial short selling strategies were exposed by the AMC and GameStop stock communities after the meme stock frenzy fiasco early last year. Both these stock share prices have been suppressed by dark pool trading, naked short selling, spoofing, and through OTC trading. The hedge fund is now being investigated after subpoenas were sent to numerous hedge funds and banks who might be connected. Morgan Stanley and Goldman Sachs are two of the banks that are being ordered to court. Among Citadel is a hedge fund by the name of Element, according to the Bloomberg report. Okay, so we'll move on from this article here to this thread. Citadel LLC, formerly known as Citadel Investment Group, is an American multinational hedge fund and financial services company. Founded in 1990 by Ken Griffin, it has more than $50 billion in assets under management as of May of 2022. So it is quite a large firm. Griffin convinced school administrators to allow him to install a satellite dish on the roof of the Cabot House dormitory to receive stock quotes. He also asked Terrence J. O'Connor, the manager of convertible bonds at Merrill Lynch in Boston, to open a brokerage account for him with $100,000 that Griffin had gotten from his grandmother, his dentist, and others. His first fund launched in 1987 with $265,000 days after his 19th birthday. The fund launched in time to profit from short positions on Black Monday back in 1987. Naubar Afeyan started his first biotech company in 1987, just a few days before Black Monday. Afeyan was the first PhD graduate from MIT's Center for Bioprocess Engineering. Afeyan is the founder and CEO of Flagship Pioneering, a venture capital company focused on biotechnology in 2000. After graduating in 1989, Griffin moved to Chicago to work with Frank Mayer, founder of Glenwood Capital Investments. A year later, in 1980, Griffin founded Citadel LLC. From the time of his marriage in 2003 until late 2009, Griffin was the lead investor in Aragon Global Management, a hedge fund run by his then wife, Anne Diaz Griffin. Anne was born and grew up in France before moving to the United States to study at the Georgetown University School of Foreign Service, ding ding, in 1992. She graduated summa cum laude and received an MBA from Harvard Business School. Diaz worked full-time in public policy research during college on both domestic and foreign policy issues. Are you getting the spook vibes yet? I mean, come on. She was a research assistant to constitutional law scholar Walter Burns, the Olin Professor of Government at Georgetown University, and helped research a book on the Electoral College. You could not make this stuff up, like, even if you wanted to. Burns studied for his PhD under Leo Strauss. Yes, that Leo Strauss, at the University of Chicago, where he also became lifelong friends with Herbert Storing. Burns taught at Cornell from 1959 to 1969 and chaired the Department of Government from 63 to 67. Burns was an active participant in the debates leading up to the takeover of the Cornell Student Union by Black separatist activists in 1969. Burns and Bloom were among a small cohort of professors who argued for the primacy of the liberal arts and for, quote, academic freedom, unquote, to disagree with the changes and, quote unquote, new orthodoxy spearheaded by university president James A. Perkins, such as the erosion of the core curriculum and the concessions to demands for a Black-only college. Historian David Kagan was a professor at Cornell from 58 to 69 and left Cornell due to the takeover. Kagan was once a liberal Democrat, but his views changed after the takeover and became one of the original signers of the 1997 Statement of Principles by the neoconservative think tank Project for the New American Century, PNAC. Yes, look into 9/11. Thank you very much. Both Friedrich and his father, Donald Kagan, who was a professor at Yale and fellow at the Hudson Institute, authored While America Sleeps, Self-Delusion, Military Weakness, and the Threat to Peace Today, from the year 2000. The book argued in favor of a large increase in military spending and warned of future threats, including from a potential revival of Iraq's WMD program. Flash pile Freddie Kagan authored the, quote, Real Iraq Study Group, unquote, report as the American Enterprise Institute's rival to the Iraq Study Group report, James Baker and Lee H. Hamilton in December 2006. The AEI report, Choosing Victory, A Plan for Success in Iraq, was released on January 5, 2007, and Kagan was said to have won over the ear of President George W. Bush, strongly influencing his subsequent surge plan for changing the course of the Iraq War. Along with retired General Jack Keane, retired Colonel Joel Armstrong, and retired Major Daniel Dwyer, Kagan is credited as one of the, quote, intellectual architects of the surge plan. Emma Skye, OBE, is a British expert on conflict, reconciliation, and stability who has worked mainly in the Middle East. She served in Iraq as the political advisor to U.S. General Ray Odiniro and General David Petraeus during the surge. She is currently director of the International Leadership Center at Yale University, overseeing the Yale World Fellows Program. Yeah. And other initiatives. She is a senior fellow at Yale's Jackson Institute for Global Affairs. Journalist and White House aide Brooke Shearer was appointed its founding director, and Dan Esty, its first Yale World Fellows Program director. Cody Shearer, the unsanctioned diplomat, private eye, and Clinton investigator whose name surfaced in connection with the intelligence reports Sidney Blumenthal was channeling to Hillary Clinton during her time at the State Department. Shearer, working with his partner Blumenthal, was up to something similar during the 2011 revolution in Libya. And like in the 1990s, the Clintons were lurking on the margins. Much of the intelligence contained in memos fed to the Clinton State Department was by Sid Blumenthal. During the investigations by independent counsel Kenneth Starr, Blumenthal was called to the grand jury to testify on matters related to what Clinton had told both Blumenthal and his senior staff in regards to Monica Lewinsky. The leadership of the Republican majority in the House of Representatives felt enough evidence existed in regards to Paula Jones' case and Lewinsky for impeachment proceedings to begin in December of 1998. In 99, Christopher Hitchens wrote a profile of Donald Trump for the Sunday Herald. Trump had expressed interest in running in the 2000 U.S. presidential election as a candidate for the Reform Party. The Reform Party grew out of Ross Perot's efforts in the 92 presidential election. Trump was progressive on social issues and supported allowing openly gay soldiers in the military, saying, quote, "It would not disturb me," unquote. Trump considered himself a conservative, but criticized Pat Buchanan, one of the main paleo conservatives, saying, quote, "I'm on the conservative side, but Buchanan is Attila the Hun." He withdrew from the race, citing the party's infighting, as did Jesse Ventura in the Minnesota Reform Party. Donald Trump stated, quote, "So the Reform Party now includes a Klansman, Mr. Duke, a neo-Nazi, Mr. Buchanan, and a communist, Mrs. Fulani. This is not company I wish to keep," unquote. Mr. Duke was a reference to David Duke, a former Grand Wizard of the KKK. Leonora Fulani has worked closely since 1980 with Fred Newman, a New York-based psychotherapist and political activist who has often served as her campaign manager. And so these are the interesting connections of Citadel, Ken Griffin, his wife, and the company they keep, which I thought was very interesting. Here we have Citadel tweeting out, "Our firm has been recognized as the #1 most profitable hedge fund manager of all time. Congratulations to our teams for this extraordinary accomplishment." Wow. That's big news. Citadel Connect, Citadel Securities, and Citadel LLC, ATS/dark pool market maker and hedge fund, all owned by Kenneth Griffin. Do you see a problem here? And he tags Gary Gensler from the SEC, who has not, of course, done anything to Citadel. So Ross Gerber says the stock market is rigged by Citadel. I'm now sure How much more data you need to show this? I think he means not sure. It's time for change. The stock market should not be Ken's market. He sees all and trades around it. Biggest front-running operation in history. Wall Street Ape says, how can millions of people who have collectively lost hundreds of billions of dollars express their disgust for the criminal Ken Griffin Citadel and have nothing be done? It's madness. Thousands of people cry out for help from being robbed daily on every platform and nothing. Yes, nothing happens to Citadel or Ken Griffin, of course. Why would it? Ken Griffin's Citadel posts record profits of $16 billion last year. Could it be the $63 billion in stocks he sold and doesn't own, the massive off-exchange / dark pool fraud daily, the algorithmic trading market manipulation with trillions of counterfeit shares sold? Hashtag naked shorts. Indeed. We continue on. Citadel Cayman subsidiaries and GLB Partners LP, another Citadel Group company in the Ken Griffin empire. Must be more securities sold, not yet purchased, than what is reported by their market maker. These are all exempt from reporting financial statements. And so if you go down here, identity and background, you can see that there are a lot of things listed. They have a Cayman Island company, Citadel Jackson Investment Funds, a Cayman Island company, Citadel Equity Fund, Cayman Islands company, Citadel Credit Trading Limited, a Cayman Islands company. Yeah, so these are all of the different entities attached to Citadel. So the deal with the Citadel Ken Griffin investigation. So no records of federal investigation. There's an old one that is already done, but there's a lawsuit regarding Citadel spoofing, market manipulation of stock price, continuing research. Indeed. Biotech company says Citadel Securities and other big traders manipulated its stock price in a new lawsuit. Northwest Biotherapeutics accuses market makers of illicit spoofing orders. A biotech company accused Citadel Securities LLC, Susquehanna International Group, and other Wall Street firms of driving down its stock price through a series of illicit trading tactics. In a lawsuit filed Thursday in Manhattan federal court, Northwest Biotherapeutics alleged the market makers had repeatedly engaged in spoofing, where traders place orders with an intent to fool other investors about a stock's demand and thus manipulate the price. Northwest, whose shares trade over the counter, also sued Canaccord Genuity Inc., G1 Execution Services, GTS Securities, Instanet, Lime Trading Corp., and Virtue Americas LLC. Quote, this frivolous lawsuit appears to be nothing more than an attempt by Northwest Biotherapeutics to divert attention away from its long history of governance and management failures. SEC charges for financial reporting lapses and lawsuits from its own shareholders, unquote, a Citadel Securities spokesman said. Quote, we intend to pursue any and all legal action against Northwest Biotherapeutics for making these false and baseless allegations, which only undermine the integrity of our capital markets, unquote. Northwest shares trade at about 83 cents. In 2019, the company settled allegations by the SEC that it had failed to maintain internal control over its financial reporting. A spokesman for Nomura, which owns Instanet, declined to comment. A spokesman for Virtue had no immediate comment. The other firms did not immediately respond to requests for comment. We have the hard data, said Laura Posner, a partner with Cohen Milstein Sellers and Toll, who is representing Northwest. Quote, it's hard to dispute actual transactions and patterns. Spoofing, which was outlawed in 2010, has been at the center of a years-long campaign by U.S. authorities to root out market manipulation. In August, a federal jury in Chicago convicted two former J.P. Morgan Chase and Company traders who had been charged with spoofing in the gold market. In the stock market, high-speed trading firms such as Citadel Securities and Susquehanna provide stock quotes throughout the day, executing orders from other investors while collecting a thin spread between the buying and selling price of the shares. It is unclear from the data cited in the suit whether the alleged spoofing orders were placed on behalf of other investors or by the firms themselves. But Northwest argued that these market makers knew it was unlawful to execute the alleged trading tactics and should have had procedures in place to detect and prevent them. The market makers, Northwest wrote, quote, deliberately engaged in repeated spoofing that interfered with the natural forces of supply and demand and drove the company's share price downward over the course of the relevant period. Northwest said the alleged spoofing orders, which occurred between December 2017 and August 2022, battered the stock price even as the company released positive results from the trial of its lead product, a brain cancer treatment. In its suit, the company wrote that it had sold more than 49 million shares to raise money, quote, at artificially depressed prices, unquote. Quote, one of the telltale signs of a manipulative spoofer is a rapid reversal of trading direction. A lot of sell orders followed by buy orders, followed by cancellation of sell orders, which suggests the original sell orders were not intended to ever be really executed, but they were a ploy to drive the price down to buy low and then presumably sell high, Northwest said in its complaint. The company said it found thousands of spoofing episodes involving tens of millions of baiting orders over a 5-year span and was able to identify the market participants using trading data. So I think that is very interesting. Not sure what will come of that, but it is interesting. So this is funny because we just saw how Citadel had these record profits, right? And it is kind of reminiscent of what happened before Lehman collapsed. Lehman profits revenue spike in second quarter. This was from June of 2007, before they collapsed. Lehman Brothers Holdings today announced record profit levels during the second quarter. Lehman Brothers Holdings today announced record profit levels during second quarter. Net income spiked to 1.3 billion, a 27% jump from 1.0 billion during the same period last year. Net revenues also saw a 25% increase, reaching a record 5.5 billion from 4.4 billion in 2006. While the firm reported softness in its fixed income segment, which fell 14% to 2.2 billion due to the housing market, success in other divisions kept Lehman Brothers afloat for the quarter. Rising revenues in all business segments propelled the company's earnings. We saw the same thing with Citadel. They had revenues and profits in every single segment of their company. Companies looking to merge sought financing during the quarter, which helped raise debt origination and equity origination revenues. Gains in both boosted the company's investment banking division revenue to a record level of 1.2 billion versus 741 million in the second quarter of 2006. And let's just move over to what happens literally like 1 year later. Lehman posts 2.8 billion loss. Wall Street firm reports first loss since going public, adds it will raise 6 billion in capital through stock sale, sending shares tumbling. Lehman Brothers confirmed Monday much of the speculation that has swirled around the Wall Street firm in recent days, booking a 2.8 billion loss and announcing plans to raise 6 billion in fresh capital by selling stock. The announcement was largely aimed at dispelling fears about the underlying health of the firm, did little to soothe nervous investors, however, as Lehman shares went down more than 9% in afternoon trade. Yeah. So just consider this and then consider Citadel. So this is also another interesting thing to note here. How do hedge funds such as Citadel, Securities use AI to outperform competitors unfairly in the markets? Hedge funds like Citadel use AI to gain an edge over competitors in the markets in numerous ways. They use AI algorithms to identify market trends and anomalies, interpret vast amounts of market data, and create automated trading strategies. That gives them an advantage in terms terms of speed and accuracy of decision making, as well as the ability to react faster to changing market conditions. In addition, AI technology can help hedge funds to detect and exploit pricing inefficiencies and market patterns that would otherwise go undetected. This gives them an unfair advantage in terms of trading profitability. Does this give them an unfair advantage, and is it illegal? From a legal perspective, the use of AI by hedge funds is generally not illegal. However, it has been argued this technology gives hedge funds an unfair advantage in the markets, as they are able to leverage superior technology to generate higher returns than their competitors. This could potentially lead to a situation where the markets become less efficient and less accessible to smaller traders. I thought this was a funny meme. What's the difference here? Bernie Madoff went to jail because he stole from the 1%. Ken Griffin has not gone to jail because he has stolen from the 99%. This is another funny meme here. Financial terrorist Kevin C. Griffin, counterfeiting shares, manipulating global financial markets for personal gain, high treason and fraud, bankrupting innovative companies into the ground. And then I thought this was funny. A Netflix original, Griffin, the Monster of Wall Street, Part 2. Yes, so anyways, that is the latest with Ken Griffin and Citadel, and I think it's very interesting. I will continue to keep an eye on this because I believe that obviously an implosion is going to happen. And I think we're going to learn a lot more about what they've been doing to manipulate the market. Also, look into, and I think I covered this in my prior video, the connection between Citadel and FTX. If you enjoyed the video, please like, share, comment. That always helps with the algorithm there. And please also subscribe to my main channel, Radix Ferrum, if you haven't done so already. But I'm interested to hear your thoughts. What do you guys think about Ken Griffin and Citadel? What do you think about the possibility that it is being used as sort of like a front by the intelligence community? And maybe that's why nothing's happening to Ken Griffin and Citadel. I mean, really, we don't know. What we do know, though, is that the front-running short selling is not good. It's not a good thing. It's not helpful. And just look at also at the difference between Citadel and like BlackRock and Vanguard. You know, we talk about BlackRock so much. That's a company, a hedge fund that has been discussed repeatedly as, you know, a problem, right? And what they're doing. People have talked about how they've been buying up houses and pricing young people completely out of the housing market. We've talked about how they have $7 trillion in assets under management. We've talked about Larry Fink, his personal politics, the sorts of things that he is forcing on companies under management by them. As far as like climate change and environmentalisms go. So I'm interested to hear, though, what people think about Citadel in that light, because they're not talked about as much as, say, like BlackRock. And Ken Griffin is not as well known as Larry Fink, and perhaps he should be. Anyways, I hope you all have a good day, and I'll talk to y'all later. Whee!